Back with Market Fatafat, 17,604 on the index, listless as ever, but we're breaking it down with all the individual stocks and newsmakers that are trending in trade. Dhwani Patel is joining in as well on the charts. And Dhwani, let's get started with the first stock, the most memed, the most ridiculed stock, but look how it's performed. What's the outlook on ITC at the current level? Say for those who've missed the bus on the stock, do you think that it's a good time to nibble in, or would you wait for a bit of a further decline?
So this particular stock, ITC that we're talking about, it's never too late to enter into this particular one because it's a growth story. What we're looking at, it's a slow and steady mover, and the time when the memes are at a peak, this is the time when it tries to break all the myths down and give a fantastic move ahead. And for those who have missed the bus, it's never too late to enter in again, because what we're seeing today also, it's a momentum all-time breakout that we're witnessing over here, and it's a sign that this momentum will continue further. The ones who have missed it and the ones who are already holding on to it can hold it further on to 437 levels. The ones who are trailing it can keep a stop loss at 395, which comes up as an ideal stop loss at the current position that we're going long on.
Okay, keep an eye on those levels for ITC, but Pankaj Pandey also spoke to us on ITC. Why is he positive on this one? Why is he betting in on ITC? Let's listen.
Typically, when you sort of look at cigarette business, see, structurally that growth could be about 4-5% in the cigarette business if the taxation were to sort of normalize, or we don't see fresh bouts of higher taxation. Now, FMCG is something which is valued at 4 to 5 times sales. Typically, all these bigger companies or well-established names are even more higher multiples. And then I think the hotel as a business is something where the bulk of the capital allocation has gone in. And that is where I think has been the biggest pain point. But that business is sort of thriving or reviving for most of the players, including ITC. So I think a combination of all these is sort of helping ITC and leading to better valuations or leading to better price performance compared to the other FMCG companies.
All right, moving on then, let's talk about Tata Communications, and this particular counter actually saw a sharp reaction in yesterday's trading session on back of ET Now's interview with the management. But Ashesha, why is this one in focus today?
Well, yes, Tata Communications in focus for the second consecutive day. Today, of course, it is on the back of a brokerage note that has come in. CLSA has maintained its buy rating on the stock, but they've cut the target price from their earlier target price of 1640 rupees per share. Now the target price stands at 1550 rupees per share. They say margins missed estimates in fourth quarter due to jump in employee benefit expenses this quarter, and on the back of that they've cut FY24 and 25 EBITDA estimates by 7% and 5% respectively. They say management's focus on the data business continues, and this has led to sustained double-digit revenue growth for the company. EBITDA estimates were cut, but they believe valuations are pretty attractive at this juncture, and hence for now they maintain their buy rating on the stock, although they've cut their target price. And on the back of this note that has come in, the stock continues to be in focus today, holding on with gains of 0.4% as we speak.
That's Tata Communications on the brokerage note in focus today. Let's talk about Vodafone Idea, a smaller stock, but yes, a big name coming in there because it's notched up gains of almost 10% in trade today, because after Kumar Mangalam Birla has actually come back to the company's board as an additional director. Birla had resigned. Do not forget, he had resigned from his position as the company's chairman in 2021 when Vodafone Idea's financials were under turmoil. Following his departure, the company's poor performance over the quarter saw its sharp slip into a 52-week low at around 5.7%, 5.7 rupees. I beg your pardon. Now, however, the investors have cheered the return of Kumar Mangalam Birla, and the shares have reacted positively to this news, along with volumes that we're seeing coming in as well.
All right, moving on then, let's talk about NMDC, and that particular counter is in focus in today's trading session. If you look at the stock on an intraday basis, it had fallen as much as about 4%, which marked the biggest drop for the company since February 24th. And the reason why such a reaction on NMDC is because iron ore futures also saw a biggest intraday drop in about 6 months. Remember, the iron ore prices have been under pressure over the last 1 week, and that's having a ripple effect on NMDC. The stock, however, has recovered a tad bit from the day's lowest point, nevertheless holding on to losses of about 2.5%.
Okay, let's move right on then to other newsmakers in trade. And Harsh, what's keeping Siemens in the spotlight?
Well, yes, a new order win coming in, Avan. Or rather, Siemens has announced that a consortium of partners including Gujarat Metro Rail Corporation, are in advanced talks with regard to certain equipment supply that they are planning to do. It's going to be a state-of-the-art rail electrification technologies which they're going to provide. It is to equip both the Surat Metro Phase 1 as well as Ahmedabad Metro Phase 2. It's of course what Siemens continues to boast is that it's a step towards creating a safer, greener and smarter transport solutions for sustainable cities. So that's a big positive coming through as well. What Siemens is suggesting is that, as part of the consortium or part of the order allocated to Siemens is around 678 crore. Now that may not be much given Siemens' quarterly revenue of around 4,500 crore. And that's why you can see that the stock actually rose up early in trade, but it's fallen off a little bit towards as the day has progressed. It's down around 4%.
Okay, let's move on and talk about delivery on the charts. Dhwani, what are you looking at in terms of the technical levels here? Should we expect a good run-up?
So when we are talking about delivery over here, delivery is trying to make a bottom at the at the lows, and we are seeing some rounding formations where we are seeing accumulation happening into the stock. Slowly, what we are seeing over here also chartically is that we are making higher low formations, so this must continue further, and on the upper side the momentum must continue over here to 405 levels. The bottom formed is at 320, so one could go long into this one for a target of 405 and with a stop loss over here coming at 320.
Okay, keep an eye out on delivery. A buzz in today's trade at 353. Moving right on then, let's discuss some of those footwear stocks, the likes of Metro brands as well as Bata India on the latest note that's come out by Nuvama. For Metro brands, they've initiated a buy with a target price at close to 978, saying that there's been robust store economics that's been driven by assortment and efficiency. They believe that the long growth runway is likely to continue and there's optionality on the platform, which is a thumbs up. Bata India, they've initiated a hold rating with a target price at 1548, saying that the brand perception has improved, but it's still far away from being aspirational. The same-store sales uptick is going to be a key growth driver for Bata. That's the word coming in from Nuvama.
All right, moving on then, Dhwani, you also have a footwear company that you're tracking, and that is Bata. Where do you see this one headed from here on?
So as we already heard about the news flow coming in, so I'm not talking anything different over here on this particular stock. What we are seeing over here is in yesterday's session, we saw the stock moving above its 50-period exponential moving average on a daily chart, and today the momentum continues further. We are also seeing volumes picking up in this particular stock. So from current levels, one could go or long on Bata India for a target price of 1554, and on the lower side, the stop loss over here comes at 1445.
All right, let's track Bata India there on the charts according to Dhwani. Moving on then, discuss heavyweight ICICI Bank, and Ashesha, tomorrow is the day when it comes out with its numbers.
Well, yes, and on the back of that, the stock continues to be in focus today. Net interest income for the quarter gone by is expected to increase slightly. We are expecting net interest income to come in at 17,500 crores, which will be an uptick of about 6% on a quarter-on-quarter basis. As far as profit after tax is concerned, we are expecting that figure to come in at 9,000 crores versus 7,020 crores that the company had reported same time last year, indicating a jump of 28% on a year-on-year basis. Provisions, meanwhile, are expected to decline. They are expected to come in at 2,000 crores, a downtick of about 11% on a quarter-on-quarter basis. So keep an eye out on ICICI Bank, which will be reporting its numbers tomorrow.
Okay, and Harsh, ICICI Prudential also in focus today. Why is that so?
Well, results, Vinny. So we've seen a good set of numbers, if I can call it, from ICICI Prudential. VNB expanded 36% year-on-year. APE also grew 27% year-on-year, and we saw new business premium expand by a healthy 18%. We also spoke with the management, and they continue to believe that VNB will continue to grow in that late teens bracket. So that's a positive. New business premium will continue to grow, and new premium earned grew 11%. So that's slightly tepid. But the APE growth of 27% was largely driven by traditional savings and annuity business. So those particular businesses saw strong traction. So that was the positive coming through. In terms of total expenses, they were up around 18% year on year, and profit after tax was up 27% year on year. On a full year basis as well, embedded value has expanded by around 13%, trading at a price to embedded value of around 1.8 times now. And the ROEV, which is a return on embedded value, came in at 17.5% for the full year FY23. So a decent set overall, but good strong numbers when it comes to growth. Margin expansion has come through as well. In fact, value of new business margins came in at 32%. So that's a solid set of numbers from ICICI Pru.
At number 27, that's ICICI Pru. Moving right on, then let's hear it out from NS Kannan, the MD and CEO of the company, who believes that margins can grow in the coming quarters.
Yeah, at 32% margin, VNB margin today, we are the best in class as of today. That's what I want to first lay out. And we are not single-minded focused on the margin. Margin to us is a derivative. We will focus on VNB development and margin, whatever comes out of it in terms of VNB to APE, that becomes the margin. Having said that, I do believe that the margins can potentially grow in the medium term. Why I say that is because the protection, as we talked about, it's only about 17% of our business today because of various factors which I mentioned earlier. That 17% has a potential to grow to probably a quarter of our business over the medium term because there is a huge potential and we are coming with a lower base because of the pandemic and the related supply side issues. When these things get sorted out as we move along, the protection can become a higher proportion of our product mix. When it becomes a higher proportion of our product mix, as I said earlier, it's a higher margin business, so it can push the margin up. However, having said that, we would be focused on growth, and growth has come back very strongly. If you look at the financials for 2023, and in the short term, the VNB development could be driven more by the top line, but in the medium term, I will not rule out any margin expansion, even from this highest level of margins in the industry.
All right, moving on then. Dhwani, PI Industries, how are the charts looking for this particular counter?
So when you're talking about PI Industries, nevertheless to mention that today also when we're talking about the stock, it's at the highest open interest built up change being seen over here. So the stock is picking up well on the daily chart as well over here. From current levels, one can go long into this particular counter. Even in futures, it looks very attractive due to the derivative data being in favor on the bullish side. One can go long for a target of 3,300 and a stop loss over here at 3,145.
Okay, keep an eye on those levels for PI Industries. Moving on, Power Mech also on focus. They've received an order, and that is of around 720 crores. A couple of combinations of orders that have come in over here. One is for construction of the government college and hospital in Uttarakhand, and that is for around 362 crores. Distribution work is under Ross is for around 162 crores, while the balance erection works and refurbishment of the 525 2 times megawatt Ispat in JSPL Odisha is of around 106 crores, and operation maintenance work of complete seawater intake systems is of around the remaining amount as well. So on the back of this, we're keeping an eye out on Power Mech. Not doing much in trade as of now, just up 0.2%.
Okay, speaking of not doing much, neither is Berger Paints doing a lot, and this has been over the last 1 month, over the last 6 months or so, very range bound. Dhwani, how come it features on your radar?
So the reason why it comes upon my radar is that on a short term, I'm seeing on a 30-minute chart, it's giving a triangular breakout. And today's morning session, we are seeing some upticks coming in on that, and the momentum continues further. It's a short-term trade that comes over here into picture where a target of 597 can be chased with a stop loss of 584.
All right, moving on, let's talk about the power stocks, especially power producers. All of them will be in focus given the fact that the government, or rather the country's power demand has surpassed a previous all-time high, and this happened on a Tuesday. So you need to watch out for NTPC, Adani Power, Tata Power, Torrent Power on back of the fact that there is a sharp surge coming in for the power demand. And apart from that, you should also watch out for renewable producers and transmission companies like Adani Green, Adani Transmission as well. You have NHPC and SJVN also that will be in focus given the fact that the power demand in India is at record high this week.
Okay, let's move on. And Dhwani, Kotak Bank, that features on a list as well. What do you like in this stock? What are the target prices that you're keeping an eye on?
So overall, what we're seeing that banking is definitely a little into pressure over here, but Kotak Bank has decided to decouple from the overall, trend of Bank Nifty, and we are seeing some upticks coming in on this particular stock. The momentum continues further, and one could go long into this particular one for a short-term target of 1945 with a stop loss of 1872.
All right, those are some of the levels to track on Kotak Bank. But let's move on then to another heavyweight in the Sun Singh, as the street will closely be eyeing those numbers as well. And here's what the ET Now poll estimates. The revenues are expected to come in at about 8460 crores in Q3. That's up about 8%. Margins could expand to 48%, 48.5% versus 47%. And you've got the profit, which is seen higher by nearly 9% sequentially at 2350 crores. Now, zinc prices have risen this time around. Lead prices too have been on the rise, and the margins could improve this time around largely on the back of better realizations. The guidance on realizations, dividend, all of that is going to be fairly critical, especially on their cost of production. And then clarity on the merger of Zinc's international business with Hindustan Zinc. If there are some more details on that, that will closely be watched out for by the street. The stock ahead of numbers, tempered in trade, down about 1%.
All right, moving on, let's talk about Zydus Life, Dhwani. And last whole month, we've seen the pharma stocks actually perform exceedingly well. And Zydus Life as well is joining that bandwagon, is it?
Yeah, absolutely. What we're seeing here on Zydus, a weekly chart interests me over here more than a short-term chart, because we've been seeing it made a bottom in May 2022, and since then we've been seeing a constant uptick coming in on this particular one. The momentum continues further, where we are going to see short-term targets of 540, and after that we can see the targets extending up to 600 levels as well positionally. One who is holding a long position into it can trail the stop loss to 490.
Okay, let's move on to the next one. And Yes Bank, Shesha, why have you picked out this stock today? What is the news flow here?
Well, Yes Bank will be reporting its numbers tomorrow, and we are expecting good set of numbers on a quarter-on-quarter as well as on a year-on-year basis. Net interest income is expected to come in at 2,100 crores, which will be an uptick of 7% on a quarter-on-quarter basis and 15% on a year-on-year basis. As far as profit after tax is concerned, that is expected to come in at 200 crores, which will be a decline of 46% on a year-on-year basis. But if we compare it on a sequential basis, it is expected to see an uptick of a whopping 285%. Meanwhile, keep an eye out on provisions this quarter. Slippages and recoveries will also be the key monitorable. So on the back of its results, which are expected to be released tomorrow, keep an eye out on Yes Bank today.
All right, certainly will be in the spotlight. Let's move right on then. And at number 36, Harsh, a lot of updates coming in from insurance companies.
Well, yes, life insurance in specific, Avan. So looking at LIC, whose March premium has in fact come down by 32% on a year-on-year basis. But the positive there is that overall for the year FY23, the premium is up around 16.2%, so around 17% higher in terms of overall premium for FY23. That's the positive. HDFC Life, though, has seen a solid uptick in terms of premium, 83%. Mind you, 10% of HDFC Life's premium comes from that high value segment, which has a grandfathering prior to 31st March. So March did see that uptick there. But despite that, you can see the knock on HDFC Life's price, suggesting that this could be a one-off largely. And we're looking at FY23 premium overall of around 16% of HDFC plus Exide combined. We're also looking at SBI Life, whose March premium is up by 23%, very robust there. And we're looking at FY23 full year premium, which is up 16%. So a decent set overall, but largely driven by the March numbers, largely driven by that tax incentive going away from 1st April.
All right, and that indeed was the last talk on this edition of Fatafat. Thank you so much, Harsh, Shesha, Dhwani, as well as Kunal for joining us on the show. But Power Ministry wants consumers to share aggregate technical and commercial or AT&C losses with the DISCOMs. If losses increase, half of the losses will be passed on to the consumer. Similarly, if DISCOMs gain due to the reduction in AT&C losses, 2/3 of the savings will be passed on to the consumers. What are the other details of that? Let me bring on board my colleague Prakash for that. Prakash, over to you.
Yes, your power tariff may increase based on AT&C losses of distribution companies. Discoms will be allowed to pass on part of their AT&C losses to the consumer. Power Ministry has issued draft ACT Amendment Rule 2023 to bring subsidy payment discipline in distribution sector. Also, bringing financial sustainability in power distribution sector is one of the main objectives of this draft rule. However, consumers will be given benefit in tariff if AT&C losses of distribution company comes down. Power Ministry wants distribution companies to become financially robust by bringing new loss reduction plan. As per the new plan, Discoms will have to agree on new loss reduction trajectory which is approved by the central government. Gain or losses accrued to Discoms due to deviation from agreed AT&C losses reduction plan will have to be shared between Discoms and consumer. 2/3 of the overall saving, which is coming from reduction in AT&C losses, will be passed on to the consumer in tariff. However, half of the losses, which is coming from increase in AT&C losses, will be borne by Discoms, and half of the losses will be passed on to the consumer in tariff. Apart from that, all the cost incurred by Discoms to develop robust infra for distribution sector shall also be passed through. Power Ministry has issued this draft rule and has invited comments from all stakeholders by May 11.
Many thanks, Prakash, for those details. And as we wrap it up on the show, let's hear it out from Atul Suri, who says that if you get your thematic bets right, 70% of your investments are in place. Let's listen in.
That sectors or themes, because we look at themes and we think 70% of your work is done if you get the theme right.
True.
Right? So we find that electrical equipments,
okay.
engineering,
Okay.
these are sectors which have been decadal underperformers.
How much weightage do you think one should have? For example, if we use Nifty as a benchmark, 35% is financial. So you need to stand somewhere closer to it.
Right. You don't have to.
I mean, that's what fund managers do, right?
Yes, but I am not.
Okay, that's what
I'm underweight. In fact,
You're
shockingly,
underweight
there's
financials.
consensus bullishness on banks. We have banks, but they're more commercial facing.
Yeah.
They're more commercial facing, so we feel that is where the move is. So even if the banking moves with a lower weightage, we will get a bang for a buck, because we feel that we are in the lighter space. We actually favor industrials, commercials, hardcore infra, capital goods, very different from themes and sectors that dominated the last decade.
So how do you decide the weightage then? I mean,
So as I said, our largest weightage is electrical equipments.
how much is that?
We have about 15-16% there. We have about
15-16%.
But
Yeah.
Atul, that's not an index mover, right?
In fact, as a portfolio manager, my job is not to hug the index. If I hug the index, I am not adding value. Then a person may as well go into a passive fund, an ETF. My presence or my value is only if I can create disassociated outsized returns. And that would come by not hugging the index. So we really do not try to hug the index. And that is why you will have sector bets like, as I said, electrical equipments. I think engineering is another very interesting space. Defense is another interesting space. These are sectors and themes which may not have weightages in the index, but we feel that these are stocks and sectors making new highs. And that is what will create the alpha going ahead, and that is where leadership is. So that's why I've been emphasizing that not much is happening on the index. If you're an index hugger, there's not what happening. Yeah. I mean, if a Reliance goes up, Infosys comes down.
Yeah.
If a L&T goes up and ITC goes up, something else is going down. So net, you're setting off. But in that also, there are a lot of opportunities. Sectors and stocks are doing well. And as and when we come out of this grip, you will find that leadership will come here. And as I said, that ultimately they have been decadal underperformers. They are under-owned.
Now also you feel like
I feel so. I feel that if you look at weightages per se, they have not even got to at par levels. And that, from moving underweight to overweight, when the trend or when the movement happens there, is I think a great opportunity and will give a lot of momentum to these spaces or these sectors.
So if you have to, let's say, talk about the strength in some of these stocks.
Right.
Do you expect them after a decadal underperformance to be an outperformer for at least 3 to 5 years? And we are at the beginning of a multi-year or a multi-quarter outperformance in cap goods, engineering, and electrical stocks?
I think so. I think so because we saw that last year.
Yeah.
Right? Look at PSU banks. I mean, last year the index was flat, 3% positive, and a PSU index went up 70%.
Yeah, 30%.
So what really happens is that sectors that have underperformed for so long, people naturally get underweight. And sectors which have done well, people are already overweight. So the shift that happens or the sector rotation that happens actually is a very big trigger. So I think if you get your themes right, you're thematically correct, 70% of your work gets done. 30% is about picking the stock, but 70%, it's like a boat, If the tailwinds are there, your sails are up, it will take you. You may have the best sail and the best boat, but if the tailwinds are not there, the boat doesn't move. So I feel that getting these themes are important. And when themes change, they become very big opportunities. And I think that this is the stage. I know in the boredom of the index, we all experience that. But if you start looking at stocks and you start looking at sectors, I think there's a lot happening there.
Atul, so you had a target of 21,500 on the Nifty.
Yes, I do have it. I still have it.
That will not change.
No, I'll tell you what has happened is, Nikunj, it may have got pushed back. I would have thought it would be more front-loaded because the way we were panning out at the budget time, etc., we had absolute leadership, we were global leaders. I feel that this whole Adani thing that has happened, though we are not able to quantify it, but when you have so much wealth destruction, there is going to be collateral damage. There is going to be pain. Somebody has to pay the price. It's not a free lunch in this market. And to some extent, the way India is behaving right now, I think it's a pain and price we pay. So what could have come earlier, I think will get pushed back a little bit. But I do still feel bullish looking at the internals, looking at the way global markets are, that we are headed higher. We are headed higher. May not be a big index move, but focusing on these themes and sectors that we spoke about, I feel will be a big outperformance and alpha generation in the year to come.
What's in your short portfolio? You said that banks
I don't have a short book. I may just be underweight.
What are you avoiding?
As a PMS, we can't go short. No, we are not really. So let's say I'll give you an example, like auto, right? You generally talk about the 3-4 big auto companies. We have auto, we are overweight auto, but we are overweight some of the ancillaries.